All right. Good morning, good evening, good afternoon, wherever you are. Thank you for those who have just joined in. For today's session, we are going to look about mastering on how to actually do future trading. That's actually coming up with your entries, understanding how you can actually navigate different trading strategies by use of these future trading. Just to remind you, if you haven't actually subscribe to our channel, remember to subscribe to our channel. Today I'll actually be going through much deeper, especially I know most of you understand how to actually trade. You know how to set up your signals, but you have maybe an issue of actually going into, or rather how to actually understand the best time for you to trade, or the best time for to enter your entries. And today we are going to merge deeper into it, and you'll actually get to understand all these strategies. You'll get to understand all these procedure taken and the time required for you to trade, especially if you're actually based in Africa, Kenya. For those who don't know me, my name is Wilfred. I'm actually business developer. Just to venture much deeper into what we are going to cover, for today's stream we are going to cover we're going to cover the trading hours, like which hours is actually good for you to trade while in Kenya. We're also going to look at one of the amazing indicators that we normally trade, especially during these specified hour here. And the best hours for trading while in Kenya, I think we have actually 11 a.m. to 1 p.m. That's actually the best trading hours, especially if you're in Kenya. And as well, that is actually normally the London market overlaps, right? Or London market opens. Then we have from 3:30 p.m. to 6 p.m. There's actually London stroke New York overlap. So London stroke New York overlap simply means the market actually opening at the same time. So that's basically the meaning of the word overlap. Then we have from 3 p.m. to 11 p.m. This is actually the late NY sessions. So why do you think that we need to consider these trading sessions, right? Yes, we understand that market operates 24/7, but it's also very crucial for you to identify the specific hours where market is actually volatile, right? So where market is actually volatile, and these are some of the hours you find that once you place your order, you don't have to wait for too long to your order to be executed. As long as you understand the best entry, that is it. That is it. Why do you think timing matters? Let me hear from the comment section. Why do you think timing into the market matters? All right. In case you're joining us for the first time, we have also covered some of the sessions. Everything you need to understand when it comes to trading. I actually have prepared tutorial for you from the beginning, from the time of opening your account and all that. So you can actually as well go through the previous tutorial. Remember our last session we covered how you can do future trading, right? We covered from the scratch actually understanding what future trading is. Remember to go through the previous tutorial for you to get to grab all that it is entailed for you, right? Remember, trading is a procedure. In case you don't know that, there's actually the steps that is needed. You need to understand what it takes. Also, core concept, we'll use Bollinger Band. For you understanding this concept, we are going to use Bollinger Band. In case you're hearing these terms for the first time, then today you are going to understand how to do these practically, right? Because you are going to apply these practically into a real trading session. We have Bollinger Bands. This is actually a volatility indicator and identifies the overbought and oversold zones. Remember, into the market, you need to know at which period do we consider the market having overbought. As you know, we have a support. We have a support zones that have resistance zones. As well, we have demand and supply zones. So you need to understand when we reach which hour should we consider that the market is actually overbought or oversold. So you're also going to look at EMA. So this is actually exponential moving average. In case you don't understand what all this means, remember the practical application is the major part of it, right? So you only need to understand the practical application. All these indicators are just well overlaid within the exchange, so you can actually go through it. Just to remind you, for today's session, I'll be using Getayo Exchange as a preferable exchange, though this indicator, rather this session is actually applicable for all exchanges. And also just to remind you that this is actually for educational purposes. In case you find any content here is just educational purposes, therefore you are actually required to do your own research. Remember, market is very volatile when it comes to future trading. Risk management is also the key area when it covering future trading. So we are also going to look at EMA. I have said is actually exponential moving average. We are going to look at trend change patterns. That actually you need to understand the trend line, like is it market on uptrend or a downtrend. So I think these are one of the things that we'll be covering into the process. Which we are going to evaluate or go much deeper onto it. Maybe I'll be covering practical part of it. And just to share the exchange. Remember, I'll be using exchange for this case. I've mentioned Gets Exchange. All right. So these are crucial hours that you need to consider. So you need to consider these crucial hours while actually taking or doing your future trading. Another thing you need to know is that all these things, or rather all this session will actually entail or take only 1 hour. So you can actually prepare yourself for the next 1 hour. Then we'll be concluding onto this. All right. So basically, when you talk about an exchange, this is where you actually get to trade whichever you want. And for this case, remember, this strategy is applicable both on future trading and spot trading. So you can apply all these onto this type of trade. All right. This is an overview of an exchange. For those maybe who are interacting with Getayo for the first time, then I will be sharing maybe the link into the chat section for you to register your Getayo account and get to understand how you can actually trade all these. Okay, let's go on. So basically, I have mentioned before, trading hours is one of the major issue that most of you maybe actually encounter, or rather the identifying the best trading strategy, or rather the best entries, when to buy and when to sell. Remember, that is what we are going to cover into this. So first of all, you need to know this is actually pure future trading session. So you need to also have a basic of future trading, which you have actually covered from our previous class, and which was just simple understanding how to set your take profit, your stop loss, and all that. Just an overview of the chart. Let me say I might be looking for, I go to features. Remember, you are going to look at perpetual features. You need to know the difference between all these. So while trading features, we use perpetual features because it has no expiry date, right? So it has no expiry date. Supposing maybe I choose I want to trade Bitcoin against USDT on futures. I want to do an analysis based on Bitcoin against USDT. So my advice always use the major coins, or actually the major altcoins. For my case, I normally consider BTC, Ethereum, another altcoins that I normally consider the most. You have XRP, we have ADA, though you can still trade any other coin, though there's not financial advice. So it is just based on what I actually consider the most on my end. So you can whichever choose the coin you wish to trade, as long as you understand the trade strategy, how it works, and all that. So for this session, we are going to look at, as mentioned, we are going to look onto Bollinger Bands. So you need to understand how Bollinger Bands work, right? You need to understand how Bollinger Bands work. Also, we are going to look how to use EMA. So EMA simply means exponential moving average, and that's actually simply shows the volatility of the market. As well, we have a trend change. You need to understand how to identify is it if the trend have changed, or rather, or you are into uptrend or downtrend. So actually you need to draw something called a trend line. So it is actually crucial unto trading. And for this session, we have mentioned from 11 a.m. to 1 p.m. I think I'll actually starting with that hour, which is actually market London market opens. So, and it normally happens during weekdays, right? During weekdays, there's actually especially from Monday to Friday. Okay, you know, you understand that crypto actually operates 24 hours, but we have those hours that it is actually very volatile. So we understand that London and New York, these are actually the major crypto hubs. Like a lot of people are actually invested there. So you find that during the weekdays, a lot of actually the institutions, actually the banks, they are trading this crypto because there is where now the crypto hubs is actually considered to be there. So you find that during those hours they normally put in a lot of volatility, or rather a lot of money into the market during those specific hours, because those are the hours that those institutions normally opens and operates. So in case maybe you don't know, you know, also to capture or rather to know the best trading hours, especially worldwide. As well, on weekend it actually operates because but now when you try to look at the volatility and the trend is not normal, or rather the same as the one that actually happens during the weekdays. So that's why I'm considering as weekdays during those hours. So basically, assuming now you are using Bollinger Bands. Okay, I'll start first of all. Let me first of all delete all the indicators that I have here. So remember, just an overview first of all how to access the exchange. How have we actually get here? So when you log into the first time into the exchange, it will bring you to this interface here. So it will actually bring you to this interface. Well, onto this interface, you need to switch or actually go to feature trade or features. So features, you select perpetual features, then you select the coin you want to trade. Remember our previous class, I mentioned some of the things that we normally consider the best coin to trade, so I don't have to repeat. In case you missed it, remember to check on our previous video. So for this case, I said I might be trading Bitcoin, or rather let me actually trade a very volatile altcoin. I have XRP. I can choose XRP. This is not financial advice, that's for educational purpose. So when you choose XRP, some of you might ask, why am I choosing XRP, right? Remember to check our previous video. I explained everything, or rather what it takes. So sorry, you have just okay, you come on trades, then perpetual, you choose the coin you want to trade on perpetual. As I said, sorry, perpetual, then you come, you select XRP. So waiting for it to load, taking some times. Let me delete this, sorry, deleting that, delete AI. All right, now I have loaded. So assuming you're trading this coin, so you have selected XRP. We mentioned that this is actually the trading view. So here you have trading view. We have order book here. This is actually your orders, or rather the orders of trader who are placed waiting to be executed. Then the interface on the right hand side, it actually shows you how you can actually set, or rather the point or the section where you can set your orders. That's actually buying in case you want to set your market or limit order. So basically today we are going to much deeper into technical analysis, right? Remember, this is of purely technical analysis. We are combining some few fundamental analysis based on the trading hours, right? That's actually the some of the fundamental analysis that maybe we are combining onto this. So basically when you click here, it will actually open the entire trading view, so you can now see the entire page. So from here, you can now actually select the indicator you want. First of all, I have the indicators on. I can actually delete. Let me delete all the indicators so that we set together a head Bollinger Band. I'm deleting it. We had the exponential moving average. I'm deleting it. So I'm actually just remaining with the volume. I had done some analysis before. Let me delete everything. So assuming now we are having this chart here, you want to analyze the market, you want to do your market analysis and all that. Remember, we are considering the trading hours, the one that I've just mentioned before. So for this case, we are going to be trading using I'll be interchanging this time frame. So up here you can see time frame. We have 1 minute, 5 minutes, 15, 1 hour. So for this case, I'll actually, based on the indicator and the trading hours that I'll be selecting, I'll be using, or I'll be focusing on 1 minute, 15, 5 minutes, 15 and 1 hour, right? So I'll actually be interchanging all these so that you get to understand what it actually means, right? So right in here you can customize based on the hours you need for your end. So this is actually the indicators. Remember, I mentioned for this case we are going to look at this actually the symbol. This symbol here actually simply means the indicator symbol. So when you want to select or to choose an indicator to trade with, you can actually choose to, you just click on this symbol here. It is actually indicator. It is on next to delete delete function. So just click on it. So when you click on it, it just bring your actually pop-up indicators. Then you select the indicators you want. Like for this case, we said we are going to use Bollinger Bands. We are going to use exponential moving average, and then you need to understand how the trend is it downtrend or uptrend. Remember, changing trend is the major key, especially during these trading hours. So you need to know when has the trend changed. So first of all, you said we are going to use Bollinger Band. So let me actually when you just type Bollinger Band, so when you just type ball, it will actually show you Bollinger Bands. So select Bollinger Bands. So Bollinger Bands, once selected, it will actually showcase here on the trading view. You can see BB, and it has a period of 20 and 2, which is actually, you can as well hide if you want to. You can hide if you want to. Alright, as well, you can actually, for Bollinger Band, you just need to leave it the way it is. You don't have to customize anything. So it is actually Bollinger Band period 20 and amplitude 2. So 22, that is it. So you can actually see. So and onto this, it will actually show you. And Bollinger, we said it normally have 3 lines. We have the middle Bollinger Bands, we have the upper, and we have the lower Bollinger Bands. So you need to understand, when the candlestick touches the lower Bollinger Bands, what does it simplifies, or what does it mean? When the candle touches the upper Bollinger Band, what does it mean? When it touches the middle Bollinger Band, what does it mean, right? So that is actually what you need to understand when it comes to technical analysis. Okay, another indicator we want to talk about, let me hide Bollinger Band now that I have already explained what Bollinger Band is. Alright, I'm hiding Bollinger Band. So I hide Bollinger Band. Nice. So the next indicator I would like to talk about, exponential moving average. And now exponential moving average, this is also indicator found within the trading view. Remember, now when it comes to indicator, you don't have to struggle. So everything is in here. It's only you understanding how to read or interpret indicator. So I'll look about EMA. So EMA simply means exponential moving average. So we call it, you can choose EMA. And for this case, I'll choose EMA cross. I'll use EMA cross, which is simply comes in double. So that is actually EMA 9 and EMA 21. But now for 21, you'll need to customize it. So EMA 21, you'll now need to customize it. All right, let's go on. I choose EMA. I choose EMA cross. So EMA simply means exponential moving average. As well, you can just choose EMA exponential moving average, but now when I choose cross, it will come in double. So just when I select EMA cross, yeah, nice, I've already chosen it. So I have selected EMA cross, and you can see right up here it is showing EMA cross 926. So it is showing 926. I think I can zoom. Let me zoom in and zoom out so you see it clearly. All right. So you can actually see when I just as I have selected EMA cross, it is coming in double. So as you can see, it has two lines. We have the one EMA 9 and EMA 26. So what you need to do, you need to customize. So remember, Exchange actually gives EMA in default. So for EMA, I normally customize it. All right. Okay, let me actually adjust again. Just a minute. Okay. So for EMA9, waiting for it to load. So we said we customize this from EMA 26. We switch to EMA 21. So we are using two EMS, EMA9 and EMA 21. Control R. Just a minute. Just realize my network somehow issues. All right. So for EMA, we will be using EMA 9, EMA 21, and we're also going to use EMA 50. Actually, I'll explain for you what all these EMA means, especially while trying to identify the entry points and your entry points, that is. So let me say you're using waiting for, I think my network somehow down. Let's wait for it to load. Okay. So while using now EMA9, you need to, so that is it. It's accepted. So we are talking about EMA. So for EMA, you'll need to customize the EMA. So for EMA, you need to customize. So from EMA, we have EMA9 and EMA21. As you can see, when you go to setting, just click on setting. It will actually show you. You have input, you have style, you have visibility. So for setting near now, you are going short is 9, then long is 21. So here is where you need to customize. Now you set EMA 21, and just remember EMA as well. You can change the color if you want. That's a visibility in case maybe you are colorblind to the given color. So you go to style. So for the style short, you can choose short to be in yellow, and long you can choose long to be in green, or rather the color you want. So for this, let's choose green, and we just accept. So as you see, now I have selected EMA 9 and EMA 29, and remember I selected EMA cross, right? So EMA cross simply help us to identify the key regions or the key areas where this EMA 9 has crossed EMA 21. And remember, this cross has a meaning. Like in case you happen to see EMA 9 crosses EMA 21 from above downwards, so simply that means that from up downwards, as you can see, it shows that the price is actually going to drop. So you actually, in case you find any time EMA 9 now crosses from downwards upwards, you can see EMA 9 has crossed EMA 21 at this region. You can see there is actually a significant increase in price, or actually some short-term bullish, right? So that is actually what it means. And you need to understand, not every time it crosses, it will actually show that the price is going to rise. So anytime it crosses, it will actually implies sometimes you need to know what is the best place for me to enter. Now, to identify the best place for you to enter the market, that's why you normally use exponential moving average 50. So we are using 3 exponential moving average. So exponential moving average 21, exponential moving average 9, and exponential moving average 50. Remember, exponential moving average 9 and 21 comes as a exponential moving average cross, right? So it comes in double. So I'll need to enter exponential. I write EMA. I want now to add EMA 50. Remember, we already have EMA 21. We already have EMA 9. So I add EMA 50. Exponential moving average 50. So and I just search EMA. So we have EMA cross. So sorry. Okay, let me search exponential. Let me say no indicator matches your criteria. Moving average exponential, right? You can search moving average exponential. Why is it not showing? Or rather, EMA. Script. All right. Okay. You can still go back. We have abbreviation I want to use here. Let me search from here. Then I just search exponential. Yeah, exponential moving average. So exponential moving average. So when you just click exponential moving average, it normally comes in default as 9, right? So it normally comes like I have clicked here, it will actually give automatic 9. Now it is actually onto me to now customize it from 9 to 50. Remember, I already have 9. So when you see right up here, you can see exponential moving average 921, which comes in double. Then we have exponential moving average 9 again right down here, which is actually 9. So I come here to setting. So I'll come to setting, then onto style, rather the input. The input I'll now change from 9 to 50. So that is the point I change alone. So I just change from 9 to 50. Then I click OK. So as well, I can change the color. I can as well change the color for 50. Let me now change the color for 50. I change the style, and style, let me say I want it to be let me select, I don't know, I'm somehow colorblind. Let me select purple. I don't know, this purple or rather, yeah, as the one you choose, like yeah. So this is the point. Now I'll be using exponential moving average 9 and exponential moving average 21, and also exponential moving average 50. So that is how do we use these 3 exponential moving average at a go. So this is the point, and you need to be very careful here. This is what normally happens. Like in case you see exponential moving average 9 crosses exponential moving average 21 from up downwards, and the price is below the exponential moving average 50, that simply means it will be a sell. So you have to know that is a short, right? In case maybe you're intending to buy, that is actually a short, especially when you have seen a trend that is going to be downtrend, or rather it has given you a signal that is actually downtrend, or you can see the way it happens. For this case, you saw exponential moving average 9, it crossed here. You can see a cross there. So once you see 9 crosses 21, it will show a cross. So it crossed exponential moving average. So once it crossed and the price was below the exponential moving average 50, so that simply means it will be sell. As you can see, the market actually happened to sell at this particular moment. So that is it. And now that is about exponential moving average. I can as well now hide exponential moving average. Before I hide, I actually want to show you at which point do we consider, let me go to 15 minutes time frame. Remember, for this trade, especially from 9 a.m., 9 a.m. that is actually East Africa time. So you find that during those hours, price very volatile, and that is the time that market actually London market opens, especially not 9 a.m. but 11 a.m. So during these hours, you need to identify the market, and we are using this exponential moving average as well. We are using the trend as you need to know where the trend is. Is it downtrend or is it uptrend? As well, we are going to be using, you need to be using Bollinger Bands. Bollinger Bands helps you identify the oversold region, or rather the overbought region, and also in case of the price change, Bollinger Bands can actually show you that the price is actually signifying to change. How can you use Bollinger Band in this case? So for this case, I can still hide this EMA. So let me hide now exponential moving average. All right, before I hide, I was to explain to you how now to identify that exponential moving average for you to buy. Remember, it is just opposite in case you are selling. So for this case, in case you see where exponential moving average 9, like for this case, I use this example here. Let me use this example here. This is actually the today's chart, and we are trading, or rather we are looking at the chart of XRP against USDT. Remember, I trade XRP because these are some of the coins that were recommended by we say that crypto president, that's actually the Trump. He recommended some of the coins that they will actually be putting in, or rather they will be supporting onto these while he actually venture into the seat. So for this case, you see, we are talking about XRP. So I'm talking about now at which moment do we buy. So we said we're using 9 crosses 21, but now it is crossing from downwards upwards. So like for example here, it actually happened to cross up from downwards. Can I draw a circle or rather something like so all these are actually indicators. So let me see if I can draw a circle. Where is a circle? A circle is here. So you can see I'm trying to a point here. You can actually see I wanted to draw a large circle, but I don't know why my screen keeps denying me a chance, right? Keeps denying me a chance. All right, I can still delete it. Okay, I think you get this is the point. Like you can see the cross here. So this cross, it happens that it now crossed exponential moving average 9, crossed exponential moving average 21, and now it was coming from downwards upwards. And now you can see I said once you see exponential moving average 9 crosses exponential moving average 21, from now downwards upwards, from downwards upward, you can actually tell that the price will actually rise. So for this case, you can see right up here, so it crossed at this particular point, and the price or rather sorry, the exponential moving average 50 is actually below the price. So price is actually above the exponential moving average 50. So when I talk about the price above, you look at the candlestick where the price actually showing, assuming now this particular, the right hand side pattern has not formed. So we assuming you are here, like you want to enter the market here. So at this moment it was actually so you need to consider this particular hour here. So you see it is here, and exponential moving average 9 has actually crossed exponential moving average 21. And now for this case, what will happen is that you will expect the price to rise because the price is above exponential moving average 50. So for this case, you'll expect the price to rise. As you can see, once it crossed, you can see what happened, right? Price happened to rise. So that is it. As much as well we are looking into exponential moving average, remember this is not one times you don't just look at the indicator and it gives you the direction and all that. You need to understand what is the market direction, like where is market going? Is it upward or is it downtrend? So that is also a factor that you need to to consider while trading this. So let's now look onto the market direction, and these I'll actually specifically focus on the trading hours, especially said from 11 a.m. So you need to identify the market direction, like where is the market, and you need to identify the potential trend change. And these indicators as well can help you to identify the potential change into the market direction. Like I'll use Bollinger Band for this case. Bollinger Band can as well help you. Remember, Bollinger Band is the first indicator I mentioned, and we said it actually detects the overbought and oversold condition of the market. So let me say for this case, we are using now Bollinger Band. So for this case, I'm hiding the MA 50. I'm hiding the MA cross 29 and 21 and 9. So let me hide them. Now I'm only using Bollinger. So these things these indicators I told you is just here, so you don't have to struggle like I don't know what is everything here. Everything is here. Let me actually first of all delete this. So you can as well see on this graph, you can see very well on this graph. And now let's say we choose now to use Bollinger Band. How can Bollinger Band help us identify the trend? So remember, I already said the Bollinger Band, and I said there is nothing we are customizing on Bollinger Band. We are only using the given trend. So how do you identify, or how do you read the Bollinger Band? So Bollinger Band simply means there is a potential change in price. So once you see Bollinger Bands actually diverges, actually big, as you can see, a very good example is in here. So let me see, like you're using 5 minutes time frame, so you can see it diverges, right? It diverges. Like for this case, you can see price is actually continuing to rise. So in where it diverges, it shows the change in trend. So you can clearly see it on a higher time frame. So I'm assuming you are trading now on weekly basis, and now this is where now a lot of you may be fail to identify the right point to enter. So we are assuming maybe you are on 15 minutes time frame, and maybe you're on actually weekday, that is actually from 11 a.m. very early in the morning. You want to start your trading journey because those are actually the trading hours. So first of all, let me switch off the Bollinger Band. First, I use the clear I use a clear indicator here. So when you switch off the Bollinger Band, you switch off all the indicators. So remember, trend, you identify trend based on just looking at the direction of the market, looking how market have been actually performing. For example, I come here, then I actually say I want to identify the trend from this region here, from this line here. Let me draw a line here, a vertical line, so that I explain based on that. So I want to identify the trend from, where is vertical line? Vertical line is here. So from this point here, from this point, vertical line you're seeing here, I can still name it. Let me bring this vertical to my favorite. So let me add it to my favorite by just clicking onto that, start to turn yellow, then it will actually appear to my favorite tools to use to analyze the market. So assuming I'm analyzing the market from this point to this particular point here. So remember, while identifying or actually analyzing or looking at the trend of the market, you need to identify two regions or 2 points that you need to identify the market. Like point A, like for this case, I'm drawing the first line here. Then you also need to identify another point that you can actually see the market, like point there. And how do you actually identify that this is downtrend and this is uptrend? Downtrend simply means market is actually dropping. Sometimes we call it bearish, right? How do you identify the market is bearish and the market is bullish? So assuming I'm actually identifying this market from this region here, So what shall I do? I can see market initially it was actually up, right? And it is now down, and it is now down. So how do you identify the trend? So you identify the trend by drawing the trend line. And how do you draw the trend line? So trend line you draw by we have a path. So we have a path here. It is just right in here. Let me see where it is. So we have a brush on here. We have a brush. We have this. Okay, circle here. And to circle we have a path. So actually a path can still help us, or rather the trend line still can work better, but I like a path because it is easier to use. So once you can just come here up at this is the point where it was up, so it was here, then it happened to come to this point, it dropped to this point. From there it rises to this point here, then it dropped to this point, risen to this point here, drop to this right down here. I think my networks is somehow slow. From there it actually came back here, so it came here, rather again drop to this particular point here. So from there what happened is has hidden my indicators. Let me put it there. So we are still using path. From this point it came back here, so now when you draw the trend line, is just a line showing that it is market is actually collapsing or market is actually rising. And in case you are looking at the market and you see it is showing like a downtrend, it means you'll be connecting a points. It is not specifically needs to be a specific points, but this is just a line that shows you the direction of the market, so you use a trend line. Then you go to the highest point where market was, then you can choose that's the starting point. I use the trend line, that is the starting point is here. Then you draw a line. You can choose maybe to connect some few points, just like region, you can choose to connect points or major regions, or rather the points you choose. If you are drawing the uptrend, remember if it is downtrend, you'll draw the trend line on the top side. Some traders sometimes they draw the trend line on the bottom side, and it is actually downtrend. You draw the trend line on the top side. So as you can see, when I draw this line downtrend, it can simply shows you that so you are drawing just on the major regions. That is it. It can just show you that this is actually the downtrend. So that is actually the downtrend. And now once you have identified the market is downtrend, so during those hours, like let me say that from trading hours, especially the hour you have mentioned, I'm using the first hours, that's actually 11 a.m. East Africa time. You find that during this hour you might see trend might continue to we talk about continued trend or continuation of trend. Trend might continue to go down if it is actually on downtrend, or if it is uptrend, it can continue to go upwards. So or it can change. So it is up to you to identify at which point is this trend changing. And to that, I think I'll delete this and show you exactly what you need to do. So assuming now this is the trend, like you have analyzed the trend of performing this way. Let me hide the mark, this mark, I can even delete it. So assuming that maybe this is what the market have been performing all along, this is how market have been performing all along, and you want now let me delete this. So from this point to this point, assuming at this point here, let me call it point 2, I name this line 2. So let me name it I name this line 2, so let me say line 2, right, so that you get it clear. So assuming now at line 2 line true is our is the moment that the market opens, right? Actually the market opens. So assuming now it is 11 a.m. very early in the morning, you want to trade during these hours, what some of the things you need to consider here? What are some of the things you need to consider? So first of all, you need to consider the trend. You need to consider the trend. Is it downtrend or is it uptrend? So once you have identified the trend, it will actually, you will easily identify if there is any shift or change in the trend direction. So let me say maybe you're using Bollinger, you can actually switch on Bollinger, and you can see for this case, in case assuming this is the hours and it is actually 11 a.m., switch on Bollinger. So for this case, you can still switch off Bollinger. Now you want to come up with your signal, like now with your signal, and this is what normally happens. This is what normally happens. So now you have identified the trend. Like for this case, you can easily see that from that particular moment, trend have been downtrend. It have been downtrend. It has been actually going down, as you can see. Now for this case, you can shift this time frame from 15 to 5 minutes time frame. So let's see what is happening in 5 minutes time frame based on this. So you can see 5 minutes time frame. Maybe for the newbie, just that time frame simply means it is actually the time this one candlestick is taking to form. Like if you are selecting 15 minutes time frame, it means that for one candlestick to form, it will take 15 minutes. So if you are selecting 5 minutes, for one candlestick to form, it means it will take 5 minutes. So for this case, you are here, you want to identify market direction. Like for this case, in case it goes this way, you can see market is already on downtrend. So this market can either continue to go down, or it can change the trend to go up. And this is what normally happens during trading hours. Especially, just wait, within the first 30 minutes, the market will actually give you the direction. Like I covered ORB strategy, which is also one of the amazing strategy to trade during those trading hours, especially from 5 a.m. 5 a.m. for the first 30 minutes of the 5 a.m. and from 4 p.m. the first 30 minutes 4 p.m. So market will also give you direction of the trend. So for this case, assuming now we are not using ORB strategy, we just want to identify the market direction. So first of all, you need to switch off the Bollinger Band, switch on the Bollinger Band. So in case you are on downtrend, and you see for this case it has not yet given you the direct entry. I'm using this example because it shows an example that usually happens, especially during that 11 a.m. I normally watch the trend during that hour. It is almost similar, the trend. So you find sometimes it normally drops to about 10 a.m. Then after 5, you find we have a price change, or rather the trend change in trend, right? So for that moment, is up to you now to identify at which point should I actually enter. So don't, or rather avoid actually premature entries. So you need to be very sure with what you're doing. You need to be very sure with what you're doing. If it is the trend, you need to be very sure at which moment are you entering. So for this case, you have to go use Bollinger Band, and sometimes use Bollinger Band. So here we are combining several indicators. Here we are combining several indicators. Remember, you can even combine Bollinger Bands, you can combine moving average, cross. You see how it is actually all of them performing. So for this case, like this 15 minutes time frame, what we normally do, first of all, you identify the trend is already on downtrend, so there is a possible change in trend. And what happens, what actually help us know there is a possible change in trend, especially when Bollinger Band happens to squeeze the way they have actually squeezed, the upper Bollinger Band and the lower Bollinger Band happen to squeeze. happen to squeeze, the way it has squeezed here, like this is what I mean, and it happens on during that hours, rather during that 11 a.m. hours. So that can actually simplifies there is a potential change in trend. There is a potential change in trend, but you need to identify, in case I enter the market, where is the best time to enter. Sometimes it might actually show this way, and you find maybe the price still goes down, right? Go down to a specific region for it to buy. Or rather, in case you are targeting maybe a short position, you need to know the best point for you to enter that short position. So for this kind of a trade, you need to know, after identifying the Bollinger Band, next thing you need to identify is the trend direction. And one of the things that I have failed to mention here, you need to know support and resistance zone, especially during those hours. Remember, I said we are trading using a small time frame like 5 minutes and 15 minutes, right? So that's actually the hour recommended to trade using this Bollinger Band during those hours, 5 to 15 minutes. Sometimes you can shift to 1 hour, still okay. 1 hour now, it will give you now, in case you're using exponential moving average, it will give you the cross. So the cross for 1 hour is somehow a strong signal, so compared to the smaller time frames. So for this case now, assuming you want to identify the support and resistance zone on 15 minutes time frame, assuming you are coming here, like for this case now, you are already here, you want to enter the market, and you have been actually looking for the market all along from this particular point, how it has formed all this pattern. You can now just come right, let me say just come right back here, close here. So this, it was up, it came right, it came this way to that particular point. After there, it risen to this particular point here. After there, it came back, it dropped to this point here. After there, it happened to rise to this point here. Then it came back here. Then it see, that is what is happening. Now, as a trader, you need to know that this is purely downtrend, and during downtrend, there is also a possible price change, or actually the price reversal. And now you have identified the trend, and you can easily tell that the market is dropping. So how do you know the market is dropping? You joining the highest points, so the highest point where the market have reached, that points we call it resistance. Maybe for those who are just attending this for the first time, the highest point, we call the highest point resistance. Then the lowest points, these lowest points here, we call them support zones. So these zones is the one that help us, I know, at which point should we actually enter. So you can use support and resistance to determine which point to enter the market. Now for this case, we said you're using, for now, in case maybe the market is dropping, we'll be using resistance zone, the upper zone, the previous upper zone. That's actually the resistance zone. Now, this is what happens. You need to identify if the previous resistance is broken. Okay, this is what happens. Now let me say this point here, if you are on downtrend, the previous resistance is on a higher point compared to the next resistance. So let me say I happen to draw, let me use a horizontal array. I happen to use a horizontal array, and I say, you can see the point we had, this is actually the resistance. There was the initial resistance. We call this initial, let me say this is initial resistance. This is the point initial resistance here, and now I want to enter second resistance again. Let me second resistance that formed from this point. Remember, this was upper. We have another resistance here that formed this point here. That is the second resistance. This is the second resistance. From there, we had another resistance that happened to form below this point here. Now from there, we have another is coming right down here. And resistance, we are connecting resistance to determine the the trend, the downtrend, we connect resistance. In case we could now be identifying, or rather looking for the uptrend, we could now connect supports. We could now connect support. Don't confuse. Now this is the point. In case you happen during those hours, during especially during 11 a.m., market is always volatile. Market is always volatile, and this is the hour that you can once it happens to break the previous resistance, market always change in price, or actually change in trend, and you can confirm that by use of Bollinger Band. So this is what you do. So what I normally do is that once you see market has actually come, it has broken the first resistance. Once it broke the first resistance during that hour, and you actually can still backtest, or rather the check by use of other indicators as well, use of exponential moving average. We have another powerful indicator I haven't mentioned before, but I mentioned another class we call AWVP. So it's also, it acts the same as exponential moving average 50. So that is the point. So in case it happens during that hour, that's actually 11 a.m., and market come and it breaks the first resistance, or rather the first resistance here, and sometimes you find those resistance are actually somehow crossed. So what you do, you just wait market crossing the first resistance. This is the first resistance it has formed. So once it crosses the first resistance, it shows that there is a trend change. So it will form another point that is somehow above this resistance point, and that means it is actually breaking the low or forming previous resistance, right? Or rather the low resistance compared to this point, but now it is forming another resistance above the previous resistance here. So market have been down, and it is now breaking the norm, or rather breaking the rules, and is forming resistance above this resistance. So what will happen, it has broken the rule of downtrend. So it simplifies that the market is actually tending to change in direction, and you can check with that as well using Bollinger Band, just to confirm, or rather to have a clear and a strong signal using Bollinger Band. Bollinger Band, at that moment you find they are happening maybe to form something like it is squeezing, or rather squeezing together. So that shows that price is showing an indicator of change in price. So what you do, once you are waiting for that particular moment, or you're actually eager to enter the market during that moment, you need to be very patient during this hour. So you need to actually mark this particular point. This is actually the resistance zone, previous resistance zone, right? Now you need to wait market, or rather this candlestick come and break this particular point, break this resistance point, previous resistance, and it must break with a high volume, or rather let it break this line and close above it. When you talk about candle closing, we have two parts of a candlestick. We have a wick part and we have a body. So I mean, it must cross with a body, not a wick. So a wick simply means an example from this. Let me switch off Bollinger Bands, so that I explain, maybe for those who don't know, what a wick and a body is. So a wick simply means, like you see, we have this candlestick, and the candlestick we have like for this case. Okay, let me zoom and select one candlestick that has both characteristics of a wick and a body. Yes. Now, assuming I'm selecting this green candlestick, I name it alright, okay, you can still see this green candlestick. So this green candlestick, as you can see, it has this line, just a weak line, just a line, and we have this body that is actually very thick in green, and we have just lines. So these lines they show that just like a vertical line that's come attaches the body, these are the lines we are calling wick, and it normally happens, it have both on top, both on bottom and top. So you need to see that a candlestick has closed that line with a body. With a body simply means not a wick, not by a line. So it should not go up, come and close below that line, like forming a wick, you see. So that's what I mean in simple terms. Once you see it has crossed these, sometimes you can be very patient. Once you see it crosses, it will always come back. It can still cross this particular line and come back to this particular point, or rather the previous, we call the previous resistance. Like for this case, maybe this particular point here. Then again it rises again. So still, what you do as a trader, like for this case, you see it has broken the norm. Suppose it happens to come and actually being prevented by this resistance and start going downwards, what will happen in this case? It might still continue being on downtrend. So what will happen is that it might come back. Now in case it have this resistance prevent it, or rather it forms a resistance point below this previous resistance. So this is what happens. It will again come back, and it will come back below this previous low, because it is a continuation of the price, so downtrend. So you need to target right down here. So what you should do as a trader, like maybe you are shorting, or rather you have seen the price is actually on downtrend continuation, so you need to enter, you can choose to enter the market at that particular point. And sometimes Bollinger Band can guide you. So let me switch on the Bollinger Band again. So sometimes you might find that resistance always are prevented by the middle Bollinger Band. So in case it is on up downtrend, it comes on there. Once it attaches the middle Bollinger Bands now acts as a resistance zone. So like for this case, you can see the zones where Bollinger Band were used to act as a resistance zone in case it was on downtrend. So you can see in most scenario. So sometimes you need to be very, very careful here. So once you see it is prevented by Bollinger Band, it might show that price might still continue to come back, or rather to drop. So also you need to understand different candlestick formation. But for today, let's just talk about how to identify the signal using Bollinger Band, change in trend, and as well using exponential moving average. So now exponential moving average is just like acts like a booster. Like it helps you have a clear mindset, or rather a strong signal. Assuming market has come and it has crossed this. Let me hide another indicator. Let me hide another indicator like Bollinger Band for you to see. I have hidden Bollinger Band. Now, assuming this market come and cross here, it crosses here. Once it crosses here, it breaks this resistance. It comes above it, so it will act as your entry point. So this market will act as your entry point just above this point. So now you need to enter this market once it has broken this point, or once you can still wait it closes above this particular point and enter. Then you need to set your stop loss below you, like for this case is 15 minutes time frame. Sometimes you might find maybe your stop loss is very far, right? You can shift back or switch to 5 minutes time frame. You see where is the support, or rather the support, the previous support on 5 minutes time frame. You can see now when I shift to 5 minutes time frame, it can now give you a finer detail of how the price is behaving, right? So you can now see that price is actually really forming uptrend, because you can see on 5 minutes time frame as well. On 5 minutes, let me squeeze it. You can see it is somehow is actually coming down, and once it has come down, it came up to this point here. It is actually rising, and it forms another point here. It came down, but not beyond the previous low. So it is forming a short-term bullish, or actually a short-term uptrend. So what you need to know is that once it has already broken the first point here, so it has broken this resistance here, the one that is formed, it came down, come and broke the resistance again, upper, so it is now up. So what you are waiting, remember this is the line we have drawn on 15 minutes time frame, so 15 minutes time frame could show this as the point. So but on 5-minute time frame is still showing that the price is showing a change in price. Let's see how exponential moving average 9 and 21 are behaving. Have they crossed? So you switch and see. Yes, you can see on 5 minutes time frame, exponential moving average 21, it has already crossed and it has shown a plus here. Now you can still switch to exponential moving average 50. 50 simply show us entry points. If the price is above 50, you can see the price is above exponential moving average 50. So on 5 minutes time frame, it is showing we are having a bullish, or rather the price is tending to go high, or rather to increase. So for this case, you can see it is actually showing it is a bullish momentum. Now what you need, already it has already given you a bullish signal on 5 minutes time frame, and you have to also switch. Let's see how Bollinger Band are behaving on 5 minutes time frame, because the same Bollinger Band has same color as exponential moving average. Let's switch off exponential moving average and see how Bollinger Band is behaving. Where is Bollinger Band? Oh, I deleted it unknowingly. Okay, I can set it again. So Bollinger Band, that is it. So you can still see how Bollinger Band is seeing. You can see, but initially there is the what happened. It was actually it diverged here. It diverged here, as you can see. It was actually diverged here, and from this point it came here, and it's actually trying to converge, actually squeezing, as I have mentioned before. So squeezing, what does it mean? It's showing possible change in price, so, or rather possible change in trend. Remember, it has been downtrend. Now 5 minutes have shown you we have a possible price change. You shift back, but now remember where 15 minutes signal was. If price has to cross 15 minutes time frame, so in case maybe you can risk enter the signal on 5 minutes time frame, but for clear signal you can still wait for 15 minutes time frame. So you change to 15. So remember, I'm changing to 15. 15 is on higher time frame, so it means it will give a clear, very much clear signal. So when I switch back to 15 minutes time frame, you can now clearly see what is happening. So we are waiting this to break this trend. Actually here, once it breaks that line, where are you going to set your stop loss, and where are you going to set your take profit? So the first thing, once it break here, your stop loss must target the previous resistance, right? Like once it break this resistance here, what will happen? Like what is the hour, by the way? It is we said initially, we also talked about like for trading hours, we need to consider with these hours. So I think we are just within the trading hours. So this strategy works within the trading hours. Let's see what we talked about based on the trading hours. So remember, we said from 11 a.m. to 1 p.m. that is actually London time. Remember, this is East Africa time. Wherever you are listening this, you can convert to your local time, so that you know exactly which are the hours. So for this case, you can actually see from 3 p.m. to 6 p.m. is actually in London, New York time. From 9 p.m. to 11 p.m. These is actually the hours that we can still apply whatever we are just doing here. So that is what is happening. So we are just within the hours. Well, so you can actually choose to go with this strategy during this hour, because we are within the hour. So this is what we are talking about. Once it happens to break and close above this, so this is actually it shows that the price or rather the trend is actually signifying change. But you need to wait until it closes above this. So as well, you can come back on 15 minutes time frame and switch off. You can switch off Bollinger Band. You can see Bollinger Band showing some form of divergence, actually showing some form of convergence, sorry. So you can see how it is behaving. So it has been actually showing a form where it is actually coming to squeeze. So that is actually the trend, like showing a possible trend change. So we are using all these, we are combining all these to come up with a very, very strong signal. So let's now go to switch off Bollinger Band and look how exponential moving average 9 and 21 is behaving. Remember, exponential moving average 21 and 9 help us to know the bullish, rather where the price is actually going. Like you can see exponential moving average, they have not yet crossed, but you saw initially it had crossed on 5 minutes time frame. Like come back on 5 minutes time frame. When you go back on 5, you see it crossed here, and I told you once it crosses here, it shows that price is going to rise. So where do you consider entering the price? You switch on exponential moving average 50, and once you see it has crossed 9, crossed exponential moving average 21, and the price of that coin is above the exponential moving average 50, that is simply means it is a buy, and you are buying until to the previous resistance, like for this case you can see it has already broken the line. You can wait for adjustment, and you can see once it broken the line, you can wait for it to retrace back. After retracing back, there is a possible bullish reversal. There is a possible bullish, right? Possible bullish to the previous resistance. So let's switch back to 15 minutes time frame. 15 minutes time frame, you can see on 15 minutes time frame we are still on the same candlestick. So that's why I told you 15 minutes time frame is a somehow larger time frame compared to 5 minutes, so it will give a very, very clear and strong signal. So let's now see what will happen. So in case it happens to break here, where should I enter the market? Now you can switch. I enter the market above this point once it has broken this resistance zone. So let me say we choose to enter the market at this point here. You can still adjust, let's adjust this line. So these are our entry just above that particular zone. So because it will signify that it has broken the resistance point zone. Remember, resistance zone or support zone is not a single line. It is a region. So that's something you need to be very, very conversed, or rather understand. It's not a zone, it's not a line, a single price line, but it is a region. Like for this case, it is this region here, So that's why when we are drawing resistance or a support zones, we draw by use of a rectangle. These are actually the region we are drawing using this particular point. Now while now analyzing this market, you wait, maybe it breaks here. Once it touches that particular line, you choose maybe to enter there. Maybe it has broken that particular point, and you can see as well it has broken the resistance, the upper middle Bollinger Band. So you can choose to enter the market there. At this moment, let me change the color of this from red so that I avoid confusion. So I might choose to change from red to yellow, so that as you can see, when I change to yellow, on the other side price is also changing. Okay, now that is it. So you need to wait so that it fails to give you a false signal, right? So make sure it has broken the resistance zone clearly. So sometimes it fails to break resistance zone and it gives you some signal showing it might actually reverse. Once it reverses, you have to set your stop loss below this particular point, because it shows that there is actually a continuation of the price change. So but once it breaks, you have to be this is what normally happens. Okay, sometimes you might not be that much sure, but what happens here, once it breaks that particular zones, shows the change in the trend, and sometimes trend may continue to go. It might even change and go back to up here, right, and go back to upper points here, so even towards these points. So that is what you need to know. So like in case it happens to break, we enter that particular zone, you can come here and select a long position. So actually this is actually the symbol for long, like when you long position. So we will be longing position once it break that particular line we are drawing here. So you can now choose to long your position from that point to the previous, to this resistance upper here, somewhere upper here. But now where do you set your stop loss? Your stop loss, you can still, in case you find that maybe you are very high, remember you have to make sure you are minimizing the risk as much as possible, right? So you have to maximize your profit and minimize your risk. So you can still shift back to 5 minutes time frame, see where there is actually possible change in price, or rather in case it happens maybe to break resistance on, or rather to break the support on 5 minutes time frame, there is a possibility of the price continuation, or rather the continuation of the trend to drop downwards, right? So that is it. Like on 5 minutes time frame, when you come back here, you can see this was actually the previous resistance zone, support zone. Remember the lower side is support zone. Now when you're drawing the down uptrend, we draw connecting the support zone. That is, so this is actually the zone, the first support zone for the 5 minutes time frame, like here. Another one, we have this one here. So what can you see here? You can actually see that I'm considering the lower time frame. Like the previous support, it was on lower point than the support that followed. That's why as you draw the line, you are drawing uptrend based connecting the supports. Now for this case, you can choose to place your stop loss on the below the previous support, like below, or rather you can even choose to place below the previous support here, below the previous support here. So below the previous support is here, just below there. And now your target should be two times your loss. You can target 2 times your stop loss, 2 times your stop loss. Remember here we are maximizing you are maximizing. So for rather in case it happens the trend might continue and come back to even to this point here. So that is your target, 2.3 in case it happens to change in price. Rather, this is actually the trend that might happen to, because we are still actually on the trading hours. So you need to wait. In case it happens to break the resistance at this zone, then that simply means the price will actually be rising. The price will actually be rising. So as you can see, that is you have actually set your trade. You have there is actually your entry. So you can be waiting, just to wait for a clear signal, or rather the price to be executed. So this applies during the trading hours. Remember, don't forget the trading hours. And this strategy still can work on other hours, but it is highly recommended on trading hours. And I have majorly focused on the major coins. That is actually BTC, Ethereum, Solana. We have another major altcoin like I trade most of them. We have ADA, we have XRP. So this is actually applicable for that trend. So let me see, in case you have a question before we close up. In case you have a question before we close up, you can actually drop your question. All right. That is just to remind you, for those who are joining us for the first time, remember to like or rather to follow our YouTube channel. Remember, here is where you'll be getting to understand future trading, spot trading, different types of trade. In case you happen to have a question, drop your question there, then we'll be looking into it. Thank you guys for those who have been live. Thank you for those who have been live. Remember, for the next session we are going to cover another new strategy, so remember to subscribe to get this amazing strategy. I might say, may you have a good night, good morning, good afternoon, wherever you are.